Hi, everybody. It's Peter Schiff. It is Friday, June 1st, 2012. A big day in the markets today. We got news that did not come as a surprise to me, but it seems to have come as a surprise to all the so-called experts. But we got the jobs data for May, and the number was not good. The estimates were for 150,000 new jobs created. Instead, we only got 69,000 jobs, fewer than half of what had been forecast. Adding insult to injury, they had about 49,000 of downward revisions to jobs that the government told us were created, I think, in March and April, but which were not created. The unemployment rate actually ticked up a notch for the first time in many months. Now it's up to 8.2. I think that might be the start of a trend. The more important number that always gets downplayed in the media, the U6, which is the number that includes all these discouraged workers, those who are working part-time but really are still looking for full-time work. That number had ticked up from 14.5 to 14.8%. Now, of course, this follows yesterday's downward revision to first quarter GDP. First, the government said it was 2.2 growth. Now they're saying 1.9. My guess is that the 1.9 is probably too optimistic, and they might end up revising it down yet again. And the question is, what is the second quarter GDP going to look like? It'll probably be even worse, not better. And also, I think lost in the headlines today was the personal income and spending numbers. I think it's significant because of the savings rate. Personal income was up just 0.2, spending was up 0.3, so the savings rate dropped to 3.4. I think this is the lowest it's been since back in 2007. And this is when people still had some home equity and a lot of people still had jobs. Yet now they have to dip into a already very shallow pool of savings just to keep their heads above water as this economy sinks back into recession. And of course, I think it's all part of an ongoing depression where we have a series of recessions punctuated by artificial growth caused by stimulus. And that's really what is happening now. The stimulus is wearing off and the hangover is setting in. And of course, the bigger the stimulus, the bigger the hangover. And as the economy builds up a tolerance for stimulus, you need more and more of it to get any effect. And we've had record doses of stimulus, and we've barely had any kind of phony growth. Think about this. Again, we are rolling over into recession where unemployment is already over 8%. We're about 15% if you use the U6 numbers. Interest rates are still at zero. At zero at the end of the recovery. Imagine starting a recession from levels that normally characterize the bottom of a recession. We've just had the growth, and look where we are. All this economy can produce with record amounts of stimulus is 8.2% unemployment. That's it. That's the best we can do. And we still have interest rates at zero. We still have budget deficits greater than $1 trillion. I think $1.3 trillion is the deficit, and we're about to have another round of pump priming in big deficits. Look where we are. And I've been saying for a long time, I think this next round of stimulus is going to be the one that we overdose on if we don't go cold turkey before that happens. This is the beginning of the real crash, which again is the subject of my new book. If you haven't purchased it yet, pick up a copy of The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Future. Hey, by the way, it's not official yet, although it's official, but they haven't published the new numbers. But my book debuted in the first week. It is number 10 on the New York Times bestseller list in the category of hardcover nonfiction. It's also selling very briskly on the internet, Amazon, Barnes & Noble. You know, I happen to notice on Amazon at one point in the investment category, out of the top 5 books, my book was number 1, 2, and 5 because it has the hardcover, the Kindle, and the audio version all separately, and I was in 3 of the top 5 spots, including 1 and 2. So thanks for everybody who has picked up a copy, but let's spread the word so more people understand why the real crash is coming and whose fault it was. You know, looking at the market's reaction, first of all, before the numbers hit, the stock market was already down. The dollar was up. Gold was down about 15 bucks. And treasuries were a little higher. Oil was down. When the number came out, the stock market continued down. But the gold market had a sharp reversal. And looking at from about down 15 bucks to a rally of about $60, so about a $75 swing in the price of gold. Gold stocks also surged. If you look at the Huey index, it was up almost 7% on the day, with the Dow Jones down, what, 274 points. That looks like about a 2.5% drop. The NASDAQ was down just under 80 points. That's about 2.8%. So the mining stocks were swimming against the tide in the overall stock market, but they did follow gold higher. What is the significance of this move? To me, some traders are starting to realize that the dollar is not the safe haven it's cracked up to be. A lot of people thought that the problems were in Europe and that the salvation lie in the U.S. in the dollar. Now more people are starting to come to terms with the fact that we're in trouble too. You know, America's problems are not made in Europe. They're one of the few things that are still made in America. Even Obama today in his speech tried to blame it on Europe. Europe is the best thing we got going for us right now. Because people have been so worried about Europe, they've been buying dollars and buying treasuries. Now they had some second thoughts and they started to buy gold instead. Now the dollar did turn around against the euro. The euro ended up closing stronger on the dollar. But I think worries about the Eurozone prevented that rally from really gaining traction. Meanwhile, the dollar gained against other currencies with the exception of the yen, which is still perceived to be a safe haven. And so money still flows into the yen. But believe me, if people are afraid of the euro because of all the debt, it makes no sense to buy the dollar, which has even more debt. America has even more debt. And they're probably going to be afraid of the mountain of debt in Japan, even though Japan is more able to service that debt domestically than is America. But I think if you're truly worried about debt, you want real money. You want money that has no debt associated with it whatsoever, which is why people are piling into gold and now the companies that mine it. When it comes, though, to the dollar, I think people are still making a mistake when they're viewing it versus other currencies and treasuries. Look at the move in treasuries. So let me pull up these yields. The 10-year closed below 1.5, 1.467 on the 10-year. The 30-year at 2.54%. Talk about a bubble. When this thing bursts, look out. You know, treasuries are going to end up to be the Facebook of safe haven, right? On the Facebook IPO, everybody was lining up. They couldn't get enough. Everybody wanted to buy Facebook. Why? Because it was going to have a huge pop. Everyone's going to make money selling out to a greater fool, whatever. But everybody wanted in on the most hyped up IPO in history. And then what happened? Everybody who wanted Facebook got Facebook. And then they thought about what they owned. They looked at the fundamentals and they decided they didn't like it so much now that they had it. And that often happens. You know, sometimes you want something, and then when you get it, you realize that you don't want it. You actually want something else. And I think that's what's going to happen when people realize that they've jumped out of the frying pan into the fire. They're going to try to dump their treasuries just like they ran for the exits on Facebook. And they're going to find out that what they really want is not Facebook, not treasuries, but gold, but real money. And I think as gold gains its appeal, that will take the luster off the dollar even further and off the treasury market further. Look, people are focusing on Europe. I'm not saying Europe doesn't have problems, but we've got bigger problems. You know, as bad as theirs are, ours are worse. The difference is Europe is being forced to deal with those problems because the world isn't giving them more slack. Interest rates are already rising in Europe, and that is putting the pressure on politicians. We don't have that pressure. Our politicians have escaped it thus far because interest rates are still at zero, and we're still borrowing for next to nothing. But that's going to end. Either the Europeans are going to get a handle on their situation one way or another, there's going to be a resolution, good or bad, or people are going to figure out the mistake that they've made. And they're going to realize that the U.S. is in worse shape, and we're going to have to deal with this crisis. Because I think few people really perceive the gravity of the threat to the U.S. economy and how precarious a position we are really in fiscally, monetarily, and how bad this crash is going to be. You know, one of the temporary benefits of the strength of the dollar is oil prices continue to fall. They were down about $3 again. Crude oil now about $83 a barrel. But hey, this ain't a good thing. I mean, yes, it's good that the price of oil is coming down, but if you're unemployed and you don't even need the gas anyway because you don't have a job to drive to or you can't afford it, you probably liked it better when it was a little bit more expensive and you still had a job. But the reality is, even though oil prices are falling based on the perception that demand is going to come down because of a global recession, what the central banks around the world are going to do with money printing is going to cause prices to surge. So eventually, oil prices, I think, will be even higher than they were before this decline. Yes, we're going to use less oil, but we're going to pay a lot more for it thanks to the government. But what really is going to be the nail in the coffin when it comes to Americans buying gasoline is when a lot of these Asian economies and these emerging markets wake up and smell the dollars and they get a good whiff of it and they decide that they've made a mistake. And they let their own currencies rise. You know, Japan is going to be under pressure to stop the yen from rising and rescue the dollar, although they'll try to describe it as rescuing the yen from getting stronger. But if these other countries that have, that have a much better situation fiscally, economically, they let their currencies go up, they're going to skyrocket. And that's going to mean that prices are really going to go up for people in America and maybe Europe too, for that matter. If they continue to print euros and they don't deal with the moral hazards of trying to keep the Eurozone together, where everybody prints and governments can just borrow and push the cost onto another country, mainly Germany. But we'll see how Europe resolves that. But either way, a lot of people in the world, particularly Americans, are going to end up paying a lot more for stuff. So I think this temporary sell-off in the commodity market is a buying opportunity, but I think more importantly, pay attention to the metal market, gold market. But a real indicator of when it's really going to hit the fan here in the U.S. is going to be if the dollar follows the stock market lower, and we can see a big sell-off in the dollar. The gold market is decoupled today. We had a big rally in gold and a big rally in gold stocks, even though the U.S. stock market went down. The next leg of the decoupling, I think, will happen in the foreign exchange market, where we really see the dollar going down and not up. The final shoe to drop will probably be the bond market. But if you see the bond market going down, the dollar going down, and the stocks going down simultaneously, and gold really going up, you'll know the end is near, at least for this dynamic, and that the real crash that I've been writing about is underway. Hey, before I finish, I want to talk a little bit about one thing that Obama said in his press conference today following these abysmal job numbers. And of course, he tries to put his, the best spin he can on this thing. One of the things he focused on was that he wanted to try to make it easier for veterans who are returning from Iraq and Afghanistan, to make it easier for them to get jobs. And how did he want to do this? His proposal was that we eliminate some of these barriers to jobs, some of the licensing requirements. People have to get a particular certification or a license. Often it requires years of schooling. Sometimes those degrees are very expensive. You have to borrow a lot of money to afford them, and it takes years. And his point was, hey, there are people who are in the Army doing things. They're obviously qualified. Why do they have to get these certifications? And he's trying to find a way to fast track them so they can get around these barriers. Well, what Obama doesn't seem to understand is where these barriers came from in the first place. They came from government. They came from politicians who were just as well-intentioned as Obama, and all these obstacles were placed in the path of everybody, not just veterans. And so Obama is admitting that the way to create jobs is to get rid of the government impediments to jobs. And that starts at the federal level too. Why don't you look at all the things that the federal government is doing to legislate jobs out of existence? Start there. But yes, let's try to get around a lot of these state rules and regulations. But why stop with veterans? Why not get rid of them for everybody? Why not make it easier for everybody to get jobs? I have a full chapter in the real crash, dealing with labor, dealing with how to create jobs, and more importantly, how government is destroying jobs and destroying employment opportunities. It's important that the president understand this. You know, it's kind of ironic. Also today, I was listening, I think it was Austin Goolsbee that was on CNBC talking about the unemployment rate, and he thought that maybe it was going to tick down because he thought that as people's extended unemployment benefits expired, that they might actually take some of the jobs that exist, which was actually kind of an admission that people are not working because they have an alternative in extended unemployment benefits, which is the truth. Most people, or a lot of people rather, don't want to look for a job until they exhaust their unemployment benefits. They don't want to leave anything on the table. I mean, he's saying that, well, they're looking around, they're waiting for the perfect job. I think people who are collecting unemployment, in many cases, already have the perfect job. They get paid for doing nothing, and they don't want to quit that job. They stay on that job until they get fired. And when their unemployment benefits work out, well, then it's like getting fired from that cushy job, and now you actually go and look for a job. The problem is, though, a lot of the jobs are being destroyed by the government. But I thought it was interesting that there was an admission there, even though he didn't come out and say it. You had to read between the lines, but he understood it. But of course, you know, when people like me, when you want to point this out, the left is always quick to vilify you as saying, oh, you know, you are just bashing the unemployed. You're saying that they don't want to work, that it's their own fault. You know, I don't bash anybody. I understand human nature. I don't fault people for wanting something for nothing. I don't fault people for wanting to collect those unemployment benefits. I said I did it myself at one point, and I understand. Look, a lot of people don't want to work. There is, you know, people want to retire. I mean, what is retiring? It's not working. It's living off of your savings or living off of your pension or your investments. Well, if you can retire early on unemployment benefits, then why not do it? You know, this is human nature. Unfortunately, a lot of people in government don't understand human nature, and they don't understand the unintended consequences of their well-meaning legislation. Anyway, that's it for today. Again, don't forget, tune into my daily radio show, The Peter Schiff Show, on schiffradio.com. I give updates every day. I discuss everything that's going on. And, you know, we got a lot going on in the future, so you want to stay tuned for the blow-by-blow. And don't forget, if you don't have my book, I mentioned it earlier, The Rail Crash, pick it up, tell your friends. It's going to debut number 10, New York Times bestseller list, hardcover nonfiction. But let's try to move it up there. I want it to have legs. I want it to stay on the bestseller list. Let's see if we can make it number 1. We can do that if enough people help me spread the word, promote the book on their social media outlets, on your Twitter accounts, your Facebook accounts, emails to your friends, call up radio shows, mention, hey, I just picked up Peter Schiff's The Real Crash. Have you read it? What do you think? Here's what Peter Schiff has to say. We need to spread the word out because capitalism is going to come under fire. Especially when this real crash happens. Guys like Obama are just waiting to blame this thing on capitalism because, you know, Obama likes it, I think, when he sees failure in the economy, not that he's rooting for it, but what it does is it ratifies his own perceptions that capitalism doesn't work, that freedom is not a good idea, that what we really need is more government control and government manipulation, because in his heart, he's a socialist, right? He doesn't really feel that capitalism is the way to go. And he is looking for an opportunity to recreate and redesign America in the socialist utopian fantasy that resides in his mind. And he's just arrogant enough to think that he can do it. And that's maybe one of the main reasons that I want to have Romney be president over Obama, because it really frightens me to have this guy at the helm. You know, when the ship hits the iceberg, I'd rather have Romney, even though Romney, you know, I think he feels that capitalism and free enterprise are the way to go. I don't think he totally understands it in a way that, let's say, a Ron Paul does, but at least he's amicable to it. And I think he can learn on the job. I think we got a chance with Romney. We don't have a chance at all with Obama. And maybe the only good news about the bad news for the economy is the worse the economy gets, the worse the chances of Obama's reelection get, which I guess is the only silver lining in a very, very dark cloud. Well, on that note, have a great weekend, everybody, and bye for now.